From now on, if you don't own Bitcoin, you're a moron.
Boom shakalaka. Today's video, we are joined by fan favorite Bill Noble. He's going to be sharing exactly what you need to do to profit maximally in these turbulent markets. Stay tuned. Bill, welcome back to the channel, fan favorite. Great to have you. What an exciting market.
Yes, thanks for having me. Yes, it is truly unbelievable.
Yeah. So before we get started, because we have a lot to cover today, where can people find you?
Well, crypto_noble on Twitter, and I'm out on my own now, working for Emerging Asset Group, and you can find me at Crypto Noble on YouTube.
Awesome, awesome. So we'll put links to that down in the description. So I've been having your voice in my head the past couple of days as Bitcoin's been climbing the wall of worry, and I literally hear your voice saying it. So fill us in. What the heck is going on in these crazy markets?
Okay, well, let's start with the impact of rate hike cycles. All along I've been saying, Fed funds above 4.5% breaks something, possibly breaks everything. So we'll start with small banks, right? What do small banks do? Well, they take in deposits, they pay you nothing, and then they go out and buy higher yielding bonds. And then maybe Silicon Valley, likes to throw the dice and gamble and lend money to startups, hoping they get paid when the startups IPO or issue crypto. Well, we know that's not going on anymore. And we know these banks, because the Feds raised rates so much that the bonds that they had on their balance sheet that they bought that they bought at 2%, when rates are at 5%, rates up, bonds down. So the stuff on their balance sheet is, okay. And then all of a sudden the tweet goes out, says, hey, we need to raise funds. We need to raise money and sell stock. And then everybody goes, oh no, on Twitter. And suddenly everybody pushes a button on their phone and withdraws money out of the bank. Hence, bank disappears like the 1930s, right? An old-fashioned run on the banks. So, this is like the Twitter redux of what happened way back when everyone's just like, they've lost confidence in the banking system. Okay. So I think we may know that, but what we didn't know was that the Fed was going to step up, right? Print money to make depositors whole. So, Oprah Winfrey's money and Harry and Meghan's money in Silicon Bank, don't worry, they'll get it all back. Okay. Now, when Joe Biden says, this is key, the taxpayers will not be on the hook for this, basically what they're saying is the government is taking ownership of these banks. When people get their money back, that bank is gone. Okay. And it'll be replaced by some government-owned entity. And next time this happens, you'll get your $250K back in cash and the rest in CBDCs. Okay. And then, of course, your next step is, how far does this interest rate blow up carry out into big banks, Japanese banks, European banks? These things are never over in a weekend. It wasn't over in a weekend in crypto once it started. So, strap in.
Yeah, so it was just absolutely crazy how fast everything blew up. Went from never hearing about Silicon Valley Bank to it being the cover of every article. So how does this then affect crypto? Is it just because people no longer trust banks, so they're just going into crypto, or is there something separate going on there?
Okay, well, yeah, there's a couple ways people's attitudes are changing. So first off, if you had a lot of money in the bank and you were worried about some sort of failure, right? Like, what can you do? You can run down to your bank and, get cash. You can go buy grocery store gift cards. But if you're bigger, you just come on in, drop money into Coinbase, and just whoosh, scoop up the Bitcoin and then hope you can get the Bitcoin out of whatever exchange you're doing. You got a better chance of getting the Bitcoin out than you do the money, because who knows who's banking crypto these days. So, Bitcoin was born out of the great financial crisis where somebody would say, hey, we need an alternative asset. Bitcoin is not a hedge against inflation, it's a hedge against another 2008. While it's not exactly the same, boom, here we are. Okay. So there's this idea that has changed. And I think the big story, which maybe we can cover more later, any asset allocator, any big pension fund, any big portfolio is going to be looked at like, if they don't have an allocation to Bitcoin and they don't have an allocation to gold. Remember, we were saying the institutions are coming. Remember that? Well, this time the institutions really are coming. Really.
Mm-hmm. So you think now we're actually going to see gold price moving as well?
Yes. Yes. In other words, the dollar is done. Done. Like, that was a big theme from last year, right? At the end of last year, where I was like, they cannot keep up this rate hike cycle without blowing something up, right? Even as people were talking all hawkish this year, right? I mean, they were talking hawkish crazy, 6% Fed funds, like a week before all this started. What a bunch of goofballs. Meanwhile, the dollar really wasn't rallying. The dollar knew this was coming. So if the Fed can only hike rates so much, right? And then, of course, US credit default swaps, like people are now worried about the solvency of the US government. Can they pass a budget? Will they default? Those signals in the credit market, our risk of default has never been higher, which means one thing, right? Even if that makes no sense, that means dollar, see it, right? DXY at 80. And I've got other GAN research that says we're about to embark on a long-term dollar downtrend. And even if there are corrections and bumps, I think a major uptrend in crypto and Bitcoin is on.
Very, very interesting. Now, Bitcoin just had like a very sharp V-shaped recovery. Like it was around 25, it dropped below 20, went back to 25, now above 25 at the time of recording this. Is that an indicator of strength for Bitcoin? Because the last time I remember that was like the COVID bottom where it dropped, spiked right back up, and then took off.
Right. My joke is it's not a bull market until you can buy a dip and make money. Right. So, and a lot of people think that, dips are orderly. Whereas if you look back at the history of equities back in 2010, 2011, stuff I lived through, dips are frightening. They're frightening. I mean, could it have been any more scarier, or could it have been any more frightening with the USDC DPEG, right? Twitter influencers go, I need my dad to come hold me. It was just panic. But of course, that hit right at the 62% retracement of the big move up. And then that moment of despair was the bottom. So you bought a dip, you made money. And as long as that continues, because there are still going to be dips, right? Bitcoin's not going right to 100K. But as institutions continue to get involved, each time there's a scary dip, right? It's going to pay, I think, to be involved. Right? Because, you get these scary dips, not investment advice, but if you can get involved and have it go up again, as long as that's continuing, then this nascent bull market carries on.
So I did want to mention, I really like the background. That's really awesome. Yeah. So what else is going on now? Like, hit us with it.
Okay. Well, let's talk about GAN research. I get mixed reactions to this. In April of this year, there's a solar eclipse. So GAN was very into astronomical events, full moons, eclipses. Eclipses in general wreak havoc. I think there was an eclipse last year in November, right around when FTX happened. So this year we have a super rare eclipse called a hybrid eclipse. Meaning, if you kind of anywhere on the planet, you'll get a different view of what's happening. And some people will see what I call a ring of fire, where you'll just see the moon with a ring of fire around it.
Nice.
There's only been 12 of these since 1800. Okay. If you go back and look at the markets, right, what markets did around these eclipses, here are the themes you get. Like every big financial panic in the 1800s and the 1900s. The first one was the War of 18, after the War of 1812 and 1816, where we had a dollar devaluation. So running through all these occurrences, to keep it brief, you get financial panics, problems with the dollar, huge trends in commodities, right? There's some with oil up, some with oil down, right? Gold being involved in a lot of the monetary policy decisions back in the 1900s, right? Interest rate rising and stock market crash in 87, right? Government shutdown in 2013. All these things point to simply, a crisis that's not over in a week and a dollar decline and some big move in commodities, right? I'm guessing the move in commodities is gold and silver. Gold and silver inventories have been falling sharply. So at the moment where everybody decides to take delivery of physical, right? People want physical gold and silver. The price is just going to go much, much higher. And God forbid there's ever a default where somebody at the futures exchange in the COMEX world for gold decides they want physical gold and somebody goes, uh-oh, there isn't any. We're out, which could happen. Okay. That's when you get gold going ballistic. The case for Bitcoin is obvious, but if you got dollar down based on this history, you got gold up, right? And then Bitcoin leading. Like Bitcoin and gold could take turns leading this thing on the way up, right? And the government has thrown everything at crypto but the kitchen sink. So I'm not saying you're not going to get dips. You may get another dip in July. Who knows what they want to do, after this euphoria kind of wears off. Everybody's like, first everyone's like, oh my God, hold me. Then everybody's like long Bitcoin, short the banks forever. They'll find a middle ground, right? But these dips are to be bought because if gold and Bitcoin follow each other, and who knows, you may even get a low in equities, because here's the big point. The Fed cannot raise rates because they were breaking so many things. They were breaking the Japanese government bond market. So if interest rates have to rise, the Fed has to let long-term bonds do that. They don't control that market. They got to let somebody else do that, or some other entity. So if the Fed, has done whatever they have to do to fight inflation, that's their job, right? This gives crypto room to run because, Gensler and these guys lost in court. They threw everything at crypto. Like I saw CZ the other day going, hey, you know what? I'm going to buy Bitcoin for our personal account, right? You guys tried to take me down and now legacy's failing. How do you like me now? All right. So, I mean, there's a couple of angles to this where, it's pretty hopeful for crypto, but I mean, it's not 2021, right? It's not up only, but it has the outlook is obviously improved. And I think one final, go ahead.
Oh, well, another thing that I wanted to ask, if this isn't off topic from what you were talking about, is do you think the halving cycles still influence Bitcoin and cryptocurrency, or is there a larger macro market cycle that's influencing it? What's your take on that?
Halving cycle is good work. I mean, it's worked in the past. So why would you expect it to not continue to work? Right. So as an analyst, you always respect other people's work. The halving cycle is probably going to create, a sharp rise in Bitcoin. And, here's why, right? Global pension fund assets are, $56 trillion. Okay. If every pension fund manager had to allocate 1% of that to Bitcoin, which I can't believe they won't after seeing this. Because remember, you have Bitcoin futures, you have ETFs, you have GBTC, you have ways for big legacy players to play Bitcoin. Well, once you do a Bitcoin halving, right? If somebody's got to put 560 billion, that's 1% of 56 trillion. If they got to put that into the market, if they, I asked ChatGPT, if they got to buy that much Bitcoin and they put in a little bit every day, you get some outlandish number of like 200K Bitcoin, which are numbers that have been floated, right? But now, ChatGPT gave me a little bit of context as to, can you have 6-digit Bitcoin? Can you have it over 100K? Maybe before this, I would have been like, yeah, maybe, Ethereum might be better, the flippening, this and that. Right. From now on, if you don't own Bitcoin, you're a moron. At least that's how it's going to be seen at the institutional level, right? And it may be that way at the individual level. It's like, if you don't have it, I mean, crypto people think this, but now it's like, oh, well, we have Silicon Valley Bank, and then if you have problems with a Japanese bank, which the Financial Times has started to report, right? Because they've got Silicon Valley-like bank problems over there on a grand scale. Look, man, if you don't have Bitcoin, somebody's going to look at you and be like, what are you doing?
Dude, I love that quote. I want to add that to the end of all my videos. You just say from now on, if you don't have Bitcoin, you're a moron. Oh, that's great. That is rich. Yeah. So, okay, here's another thing. Like, Twitter is crazy. People just go nuts on there. And like, when Bitcoin price dipped from like, I don't know, 25 to below 20, like, and then it was news of the banks going bust. They were literally like, the world is ending. Like, this is it. Pandemonium. It's over. What is that? Is that possible? Is that even like a real scenario, or are they just being Twitterers?
Okay. Well, let's talk about Twitter. So everybody on Twitter had 6 months to get Bitcoin below 20, and they didn't. Then Bitcoin took off, and they were like, wow, I missed it, as if in 6 hours. They had 6 months to do it. Okay. Then Bitcoin goes to 25. Then they're like, super cycle up forever. Then it dips back to 20 or below 20, where they said they wanted it, but then they didn't want it. Right. If you think about it, the biggest levels in the history of crypto technical analysis, the 2017 highs in ETH at 1420 and 20K in Bitcoin. Yeah, ETH did kind of a nasty dip, but at the end of the day, those levels held. And I heard one influencer say, well, Bitcoin went back to 20K, and why would I get bearish? So Twitter is a great sentiment gauge. Yeah, it felt like it was the end of the world. And my saying is, it never trades bad at the top, and it never trades good at a bottom. Matter of fact, at a bottom, it usually looks like the end of the world, right? That's why you got to, rely on charts, or just, believe in what you're doing. Like the idea, like, it's not a bull market till you can buy a dip and make money. You just had to come in and take a shot. So, Twitter is like a sentiment gauge, and you kind of have to fade. You have to fade Twitter because of the emotions of that. And, everybody is a technical analyst on Twitter until they abandon that in favor of emotion. Everyone's like, oh, pay attention to me. The sky is falling. No, bro, it actually isn't. It actually isn't, or it wasn't in this case, right? Like when you had a USDC DPEG, the first thing I thought of is, oh my God, everybody in crypto has got to get out of stable coins and get into Bitcoin now, right? And then this whole bank thing continued. So, all right, now to your question about whether or not you can have, something that looks like the end of the world. Yeah, you can. I mean, especially if you look at this eclipse research. That's why there can be dips in Bitcoin. I mean, even if it goes up to 30, it'll probably come back down and retest 25. Okay. Because, you can't take rates from 0% to 5%, right? You can't have banks like Schwab who are used to paying customers nothing for their money, right? That's how Schwab operates. That's how everything is free. You can't start an environment where everyone's like, wow, okay, well, I don't care that you're paying me nothing on my cash, but then all of a sudden rates go to 4 or 5%, then they care. They're like, wow, you mean I can push a button and be in something and get 5%? Yeah. The banks haven't had to attract capital. So can you have banks blow up? Maybe, right? Can you have hedge funds blow up because of the, volatile nature of the movement in these markets? Yeah. And then you can also have kind of another problem in that people have gotten too bearish equities. This is a different end of the world. People have gotten so bearish equities. The open interest in triple leverage short ETFs in the stock market is off the charts. And retail in equities is never right about anything. I mean, yes, they hodled all the way up, but if retail is super bearish, really, there's only so much the stock market can go down. So you may be looking at a stock market bottom in March and everybody like pension funds going, oh no, we don't own it. So can you get world-ending stuff off this eclipse? Yeah, because we don't know who else is in trouble, right? It's never over in a weekend. But you got to stay with the core themes, right? World-ending stuff makes people bearish. Now, a side note, if the world-ending stuff is a problem with central bank solvency, okay, like we decide to squabble between Congress and the president and we miss a treasury bill interest payment, okay, that's Katie bar the door, right? And that could happen. That could happen, right? If you have a threat of U.S. government solvency, that'll be great for Bitcoin initially, but no, eventually rather. But if you have a situation where you have like a government that can't pay its bills, every hedge fund risk model is going to go beep, beep, beep. And they're just going to wind up having to sell everything on their books. Okay. So there are scenarios that are negative. I don't think people are using their imagination, as everyone's like, oh, tunnel vision, Silicon Valley Bank, where any potential problem is out here. Right. I'm using my imagination because in research, you get paid for imagination. But at the end of the day, I think everybody's got to come back to crypto and gold.
That's good advice. Good advice. So I'm not going to take up too much of your time because I know you're a busy guy. But anything else that we didn't cover today that we should, talk about?
Okay. Well, there's the idea of active portfolio management, right? In other words, this is the type of environment where hodling becomes relatively difficult because the market can scare you out of your positions. One of the biggest lessons from the stock market bottom after the great financial crisis, right? 2009, 2010, 2011, is that dips were scary. They were really scary, right? The other thing that you have to focus on is that if everybody is piling into Bitcoin and there is some sort of dramatic event in the world, highly speculative altcoins may not do as well. So I know everybody thinks that their altcoin can do better. I work for a small crypto company. We have our altcoins, stuff that I own, right? If Bitcoin becomes this rolling monster again, because you probably remember this from, say, 2017, when Bitcoin gets rolling, it can steamroll the rest of the crypto market. So everyone's like, crypto forever. That may not include your altcoin. So just be smart about active portfolio management and moving stuff around. One final thing is if we do have a 2008 repeat, as you noted earlier, it doesn't pay to sell despair and buy euphoria. Chasing giant green candles or puking out on 5 or 8% down days probably won't work. And if you're a trader, keeping positions smaller may help you stay in if like dramatic swings continue. Say you're watching this video a month from now.
Very, very good advice. And Bill, I got to say, it's been an absolute pleasure to have you on again. Before you go, let everybody know once again where they can find you, and I'll post the links down in the description.
Yes, Crypto Noble on YouTube. The channel's new, so I'll take all the love, haha, that I can get. Crypto_noble on Twitter, and it's crypto_noble on TikTok, where I was kind of on fire this weekend. So who knew a 50-year-old guy could kick it on TikTok? So thank you for letting me say that.
Awesome. Thank you so much. Great to have you. And we'll see you next time, Bill.
All right.
If you don't think Bitcoin's going to $1 million a coin and then $10 million a coin, you're already a loser.
From now on, if you don't own Bitcoin, you're a moron.